Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Oh, I wasn't ready. Need to start the music here. There we go. Hey, we had a wild week last week and we got CPI this week. So I don't know. I think that after everything was all said and done, it looked like it was a trade that went through in the treasury market betting on the economic data being bad, and they took profits. And so we're kind of like back to square one here. We'll see where they take it this week. And after we get those data points out of the way, we might see a more more determined move. Meanwhile, equity market's not looking so hot this morning. So let's come to the charts. There you can see the treasuries taking profits after the news and falling down a good way. Meanwhile, S&P 500 taking the downside here this morning, and you're getting a pretty decent downside trend. We're not below 4,100 yet, but that sure looks like that's where we're headed, right? Meanwhile, oil continues to hold up there. And natural gas, of course, always down. Silver and gold, man. Whee. That's interesting. What's going on in copper? Copper is doing a head fake this morning. That's interesting. Okay, and then we've got the Bitcoins kind of still within its range, and the dollar looks like there's some fleeing this morning into the dollar. I'm concerned that we're going to be in another one of those nothing matters except for the dollar kind of days. I really hate that. Morning, Anastafa. Or Anstafa. Anstafa. You know, I need to like read words a little bit better sometimes. All right. Well, the initial move, at least here in the treasury, is to the upside. So I guess another thing is I'm not feeling very good. I don't know, you can kind of see it in my face a little bit, but I've been having gut issues over the weekend. So my insurance is giving me a problem with my medication again. I should probably be okay. After I think that I made progress with them on Friday, and I think I should have that all squared away today, and then we'll be able to be more serious the rest of the week. But so today, if something crazy happens, I'm probably gonna sit that one out. If we have a good move, a gentle move to the upside, I might participate. Man, though, you come back and you look at it and you see this downtrend in the treasury. It really looks like big. It's only 30 points though. It's a little deceptive. It's not as volatile as it might appear. Yeah, it looks, it's like a strong downtrend, but it's not, it hasn't actually moved that far, relatively speaking. So volatility is actually a little bit less here. Rearranging the notepads on my desk here. Yeah, I guess the other thing is it is like holiday in some parts of the world, not like the major economies, but in some, like I didn't get the overnight like news squawk blog this morning. They're still only getting stuff from the 6th. I was like, is it not Monday? Bank of Japan's Ueda signals nothing new. Well, while I'm thinking about it, let's come over here and look at the data that we got this week. We know that there's CPI, but what else do we got? CPI is not until Wednesday. So we got a bunch of FOMC speakers tomorrow. Interesting. IMF meetings. CPI. 10-year bond auction. 30-year bond auction. So what's today's? Is there an auction today? 6-month bill auction. Okay, that's something else that we kind of have to factor in, isn't it? Okay. Let's go back and see what's going on Twitter here. L. Arian says, I think we can avoid a recession. We are seeing weakening, but the most interesting sector is services. We've had conflicting data. That's true. There's no reason why we should fall into another recession other than getting another Fed policy mistake. Oh, really? Is that after you getting so uppity about the Fed making a mistake, saying that everything's okay? It is a bank holiday in the UK. See, when I look at my calendar and stuff, it doesn't mention a bank holiday in the other parts, but it seems like it is. Like it's behaving like it is. See, I have CHF has a bank holiday. Oh, you know what? I'm just not seeing it. All of the Europeans are having a bank holiday, including the Great British Pound. There you go. There you go. In observance of Easter Monday. Why is that not a holiday in the United States? Why does the US stock market have the Friday instead? That doesn't make any sense. Okay, so maybe that's why we didn't get as... I get it the other ways, but might be a little bit quieter of a pre-market because of that, right? The delusional idea that Russian propaganda tries to spread that a gas blackmail will undermine the position of the West maps into the widespread belief by the U.S. Confederates that their refusal to allow the export of cotton to Europe would gain British support to their cause. Okay, that's a strange comparison. Shortage of U.S. cotton led to Egypt's golden age under Muhammad Ali. I guess he's saying that retaliatory stuff from Russia is not going to endear them to anybody. I don't know if that one really makes much sense in terms of having a huge impact on the geopolitics, but maybe I'm wrong on that one. All of UK have Friday and the Monday off? Really? Well, we get nothing in the United States. I think the stock market is closed, but it's not a government holiday. Nobody else gets it off. I guess they did let us home early at my day job, but nobody does any work on Friday afternoons. I find it really frustrating because Friday is often the times where I'm got things going and I'm doing stuff, and everybody else wants to tune out. So then things have to wait until the Monday. Boy, something that kind of is starting to grate on me is the whole let's make a brand off of misspelling a word. So Bloomberg is just saying, including introducing our new game Phrase, spelled F-R-A-S-E. Kind of like phrase like PH, but it's F. A game where you have an anagram to reveal a hidden phrase. Okay. It just feels like everything is like that now, and it's just annoying. Nassim Taleb, what I liked about GTP4 is that its bullshit is self-correcting while that of intellectuals is largely impervious to information, but it remains closer to an academic, psychologist, sociologist, English professor, a think tank analyst, politician than to a mathematician. That's true. You know what? I'm really... the AI thing is starting to grate on me. Because... I think that the public largely doesn't understand what it is or how it works. It's become this magic box to them. The average person, ChatGPT, has become a magic box that has all of the answers, right? When we know that it tends to give BS answers, that there's serious flaws with it, right? I'm starting to wonder if it was a mistake to give this to the public simply because the public is too stupid to know how to use it correctly. Everything that I see on TikTok, not everything that I see, but a lot of what I see on TikTok is, hey, here's how you can use ChatGPT to write content for you. And I'm like, yeah, it will write the most common, most annoying content that's out there. It's going to write the stuff that I scroll right past because I already heard that before. And I don't like your super sales pitchy tone. Oh my gosh, I hate the sales pitchy tone that it gives you. And there's this whole thing that they're like, oh, it's going to destroy all of these jobs and it's going to be like the higher paying jobs. I'm deeply skeptical about how many programming jobs disappear because of ChatGPT. I don't think so. So here's been my experience. I've had several people come to me and say, oh, hey, I had NinjaTrader, I had ChatGPT write a NinjaTrader indicator for me and it doesn't work. Can you help me fix it? Right? And multiple occasions, right? And then what it gave me was well, okay, I know where the mistakes are and I can turn it into a real indicator, but what it's doing doesn't really make sense. I don't understand why you would want to do that. It's just sort of a thing, right? So what ChatGPT is doing is it's making a lot of really simple programming tasks more accessible to people. But those were things that were relatively simple to do before anyways, if you just go and find a tutorial, right? But to do worthwhile things, you still have to know what you're doing. And one might say, well, of course the technology is going to get better. Sure, but it's a large language model. It doesn't understand what it's writing. It doesn't come up with new ideas. It's just trying to predict text. Right? I don't think programming as a job is as exposed to AI risk as bureaucracy jobs. You fit into the same laptop class as they do, but as a programmer, you produce stuff. Well, so on that side, so like here's the thing. Taking in AI and like let's just say one of the ones that they've been saying is like the most exposed is accounting. And I'm like, no. Because I don't think that you can just take a chatbot and say, here is all of our data. Tell us if we did our finances correctly or something like that. It doesn't work that way, right? And the whole problem is that an accountant is there to verify things, and we know that ChatGPT is bad at verifying things. That it makes mistakes and it thinks it's very confident about them, right? Like if it was something that thought more like a mathematician or a scientist, right? Then that would be a different thing. But we're very, very far away from making like usable AIs that do that sort of a thing. Very, very far away. Right. So like there's a lot of jobs out there that involve data pushing, right? And the issue is that the AI does not actually resolve the data pushing, right? Because the whole thing is that the data is the valuable thing, and how do you get that data into a form that the AI can understand, right? So you're just in reality, you're actually creating more jobs. You're creating jobs where instead of feeding the bureaucracy with data, you're feeding the AI with data, right? So I really do not see these places where these jobs are going to be completely replaced, right? In the areas where like ChatGPT allows you to be so efficient that you don't need as many people to do the job, it just unlocks areas of productivity in other areas, essentially, right? Like these are jobs nobody gets hired. Very, very few people in the economy get hired just to stare at a spreadsheet all day, right? Usually what happens is the staring at the spreadsheet is like a necessary part of the job that they have to do because somebody has to do it and that you don't want to do, and you kind of avoid so that you can get to the real part of the job, right? And so what will happen is just people will be able to spend more time on the real part of the job and be actually productive. Right? All of these things where it's like you come in and like takes weeks and weeks to get something done. You feel like it should take a day. It will actually just take a day, right? So it will supercharge people's productivity. It'll bring a lot of prosperity. I really don't think that it's going to kill all of these jobs, right? I think that this is being driven more by this liberal fantasy that everybody's going to get put out of work by AIs and we have to have a universal basic income. That's what it's all about, right? And like the economics never play out that way, guys. They never play out that way. Right? So when the more I think about it these days, I feel like a lot of far left politics come down to wanting to being selfish and wanting to have the reward now. Lack of patience, lack of discipline, lack of, is just instant gratification for a lot of these people, right? The primary reason that they're interested in a basic universal income isn't because they've gone and done the careful analysis about how an economy is structured and how systems are structured, and this makes the most sense from an economic perspective, yada yada. No, it's because they don't want to work. They want to be able to, they want to only have to work when they really want to. You know, I really want something, I'll go and pick up a job for a few days and then I'll get that thing. It's kind of silly. This is something that really bothers me about, I don't know if this is a generational thing, but people in general, is that they say, well, I can be awesome when I want to be, but I'm going to put in the bare minimum effort right now because I don't care and I'm not invested, etc., etc., etc. And my response is, what makes you think that you're going to be able to be just turn awesome on and off? Right? Excellence is a skill that you have to practice every day. And if all you're doing is practicing being lazy and putting in the minimal effort, then when something comes along and you really actually care, that's what you're going to do, is you're going to be lazy and put in the minimal less effort. If you really want to be that awesome, you've got to be practicing doing it all the time, so that when the day comes, it's just another day for you. Right? But nobody seems to want to put in that degree of effort. Certainly not among millennials, right? And all of these political positions that I see kind of seem to be more about like whatever feels good in the moment, rather than like a real thoughtful, reasoned out stance about, you know, improving a system. So you kind of see it going all over, you know, right? Where I live, people without jobs can't go for work, are given free houses and all expenses of around 40% of the population. Where is that? Are you saying 40% of your population would be homeless otherwise? I don't think so. Ireland, Southern Ireland, then. Could have all have been automated a while ago if we could just change our conception of things. We're in a sad trap. We don't have to work that much anymore. I say this is a libertarian type. Well, okay, so here's the thing that I think we have to understand about the current economy to really understand the efficiency productivity thing. Okay, there are some parts of the economy that have become hyper efficient, and there are other parts of the economy that are super not efficient, right? And there's a real dichotomy, and kind of what has happened is those parts of the economy that aren't efficient, it's kind of inconvenient. And so we've kind of structured everything up to kind of avoid looking at that. Right? So like, the medical system is not very efficient. Right? We know that. Like, we spend more on healthcare in the United States than other parts of the world. It's just not working very well. It's just not very efficient. Your dollars are not spent very efficiently. And you would be like, well, okay, so if like all of our expenses are going into healthcare, then why is that not showing up in the CPIs and things? Well, like it has to do with like what actually gets counted in those metrics, right? So the places where you're seeing the inflation, which is primarily housing, medical care, and education, like the CPI doesn't reflect those, right? So the CPI will show you, yeah, cost for electronics is down, cost for food, at least on a generational level. I mean, recently cost of food has been going up, but the relative cost for food is relatively cheap because we're able to grow food so productively and stuff, right? But like the cost of housing in major cities is going up like insane, right? And that doesn't show up in CPI at all because they use owner equivalent rents. So they only look at rents, right? And then there's this huge lag behind it. And so like when the real estate market is going absolutely nuts, the number doesn't reflect it at all, right? Education is not a part of CPI, I don't think. Will it work because we want to? I really don't think it's gonna work like that, guys. Because the conception that everybody seems to have is the robots will do everything and we'll have basic universal income and then people can just pursue art. I really don't think it's going to work that way. I think that the type of work that you're going to change is going to, I think the type of work is going to change, but whenever this happens, it just results in more types of jobs. It results in more work. And I think that people really overestimate how much getting things actually done is covered by these sorts of jobs that ChatGPT can do, right? The things that ChatGPT can do effectively are the annoying in-between jobs that prevent people from being truly effective and doing like their real job, right? And if you free those up, it just means that people are able to do more of the real job, right? Like selling things or developing actual products, things like that, right? So like if I work at a company like Apple, right? What should be the net effect on Apple from the introduction of AI into its processes? They should be able to put out more products, right? So for a lot of people, that just gives them more work. That just speeds things up, right? And those are higher paying jobs, right? Seems to me that there's going to be more opportunity to sell things in the future than there are today, or that there's going to be more need for salespeople in the future than there is today. That's a job you're not automating. So directly interfacing with other people, right? Probably jobs where you're directly interfacing with other people gonna increase, right? One would trading be trading for an institution is a real job. I hate to break it to some people. I'm sure that somebody's watching this right now is going to be disappointed, but retail day trading is not a real job usually. Very, very few people get to the level of success where you could really consider the day trading a real job. And to be honest, this doesn't really make, like for me, when people are like, is this your full-time job? I kind of feel like I should modify my answer a little bit. Is like, really doesn't make sense for me to try and make this my full-time job, because I only need to come in and trade for 2 or 3 hours. What am I going to do with the rest of my day, right? So I can do this for 2 hours in the morning and still hold down a regular full-time job, which by the way makes, I would have to have like a $2 million wad to be able to make as much from day trading as I do from my regular day job, right? No news today? Well, not yet. So it is a bank holiday in Europe, apparently. And things have been pretty slow. The Treasury moved up and has come all the way back down. So I would say that we're kind of getting meandering behavior that suggests to me the robots are in charge right now, and it's probably not the best time for us to get involved. Anyways, we may get to a point where like the work week is shortened, right? That we move to like a 32-hour work week instead of a 40-hour work week. That may happen. That may happen. But I'm telling you, something like ChatGPT, the net effect is going to be more jobs and more valuable jobs, not less jobs. That's always the way that it works out. And I think that there's things about how this works that unlocks productivity that it is going to create more jobs for you. Now, one thing that these critics may be right about, though, is that once you got AI going on, it really is going to make the gap between people who have assets and don't have assets is going to become really apparent, right? I think this is one of the big divides that I see in the country right now that frankly baffles me a little bit. When I say it baffles me that there are many millennials and other people on kind of more of the poor end of the spectrum in the economy right now that don't understand the importance of having assets, right? Like there's these millennials, they don't have a 401k. Like, because from my I almost hesitate to say this one because I know that there's going to be, I don't think that any of you guys will be I don't think that any of you regular watchers that are here with me on the stream every day would be offended, but if I put this on TikTok, there's going to be people that can be offended. Okay, right? If you are not like regularly contributing to a 401k, and you're not like running your own business, then you're still a child. That's how I feel. That's the true divider now in our society between adults and children is, are you contributing to your 401k? That's how I feel. What do we fill the overnight gap? I don't know. That's a tough haul, to be honest with you. So we should talk about that. And you reminded me. Maybe I can move to a different subject. So on Friday, we were working on this indicator that would cache the key volume profile levels, right? And actually, that reminds me, I need to close this workspace behind me. So anyways, I did get it to work. It was the problem that I was having was a little simple, but it kind of had to do with the way that the data was pulled and stored and everything. So I was able to fix it. And I was able to backtest it. Actually, should we just I think I'll just pull it up here. Verify what I'm looking at here. Reward factor 1. Oh, that's prior open, high, low, close, return. What we really want is this one right here. There we go. Okay, so like here's the backtest results from it. It's doing a 2-to-1 reward factor. Should I redo it with a 1-to-1 reward factor? I think that it's a little bit easier for people, I find, if it's equal risk reward, to kind of judge like the win rates and everything. If it's a 1-to-1. Oh yeah, that's actually better that way. Okay, so over 100 trades, 53% chance. It's not bad. It's not bad. The Sharpe ratio is terrible though. The Sharpe ratio is 0.23. What do you mean, does a 401k get affected by the stock market? Oh, you're in Europe. Okay. So what a 401k is it is an employer associated retirement account that you can contribute to tax free. So you're able to put your pre-tax dollars into it, and your company will match your contributions. So if you don't contribute to your 401k, you're basically like throwing money away. Okay. And there's a limit. It's like $22,500 a year that you can put into it, right? And most of what your 401k goes into is you put it into an index fund in the 401k. Yes. So your 401k value goes up and down with the market. Yes, it does. But you diversify it by putting it in an index fund, and that's why BlackRock, and this is, have you seen this sort of stuff where like BlackRock headquarters got invaded by French protesters, and people telling you like Aladdin, the AI that they created over at BlackRock, that Aladdin like runs the world and all of this sort of nonsense, right? Yeah. Okay, it's an index fund, right? They're just talking about index funds. They're saying, oh, everybody has their money in this index fund, ergo the people that run that index fund control the world. Well, no, because they manage that money. They don't own that money. That money does give them very, very powerful roles on corporate boards, though, and allows them to have a large control over corporate policy. Right? So you should put your eggs in... no. Let's not even joke about such a thing. Anyways, this trade does not look terrible, right? But look at the graph. Look at the profitability of this strategy. Right? It's like it kind of works, and then it's kind of working, and then bleh. Oh man, they got really pummeled at the beginning of January, right? The volume profile stuff kind of worked, but kind of working right now. Might get puked onion again. Now, I can only go back to July. So we're gonna have Uzi is gonna run it after this, I think, and then that might allow me to backtest it back as far as 4 years. But anyways, I tested it compared to, well, what if you just use the close prices in the same way instead of the point of control and the value area high and low and stuff like that, and results were not, I mean, kind of similar looking results, but the results weren't really very good. It might kill my computer. Yeah. Well, when I ran it took a long time. I think your computer will probably be okay, but are you going away? I usually don't take the holiday. Are you talking about in the summer? Yeah, we'll still be here, but during the summer we're gonna spend a lot more time doing things like back testing and that sort of stuff. Yeah, it'll take a long time. Hopefully, though, we get the data. If we can get the data, and if any of you have a data feed that you think would allow you to see volume profile levels further back than a year, then let me know, and we can try running the. You can try running the indicator too, but it's a NinjaTrader indicator. So, I think that if anybody is likely to have the data, it's that you can get it through NinjaTraders can be kinetic, right? Should I buy a 27-inch or a 32-inch screen for your new PC setup? Okay, so the monitors that I have are 27-inch monitors. I have 3 of them. So if you want to have like multiple monitors next to each other and stuff like that, I would not go higher than a 27-inch monitor. Okay. The monitor, like a triple monitor arm, they do not accommodate monitors larger than 27 inches very well. Okay. And once you get into those larger screens, that's the place where those people typically don't have multi-monitor setups, right? Volume profile is just showing high volume areas. Is it of any good more than that? Not from what I can tell. I mean, that's the whole thing, is that there's a lot of people out there that believe that like a point of control represents some sort of value area that the market is likely to come back to and so forth, right? So the way that this strategy that we're looking at right now works is it basically says if we open up below the previous day's value area low, then we trade it on it reverting back up. And you wait for there to be, for the market to be moving up in that direction, but you only take it like below the value area. And yeah, I mean, there's a couple. This is the one of the issues with this sort of a strategy, is that there's all these little tiny nuances. There's all these tiny little choices that you can make. Like, do you only take it when it's like exactly at that level, or like, can you say, oh, it comes quite a ways back and then it starts turning up and then I take it? And there's all of those sorts of rules, right? Well, the point to this exercise when I make it in the video is going to be, well, look, you can go and take your setup. Like, you should be able to take this information, you know, what I've given you here, and you should be able to program the setup. Should be a simple thing for people. And then you can see how your specific rules perform over a 4 to 5 year period. But on this small period, this particular iteration of the strategy does not look very good. And I would say that it kind of suggests that your odds aren't very good for that point of control really actually meaning anything. Yes, because of what caused the value area, because of accumulation. Yeah. Well, and what I have found is that the value area, or sorry, the point of control corresponds pretty closely to the close in the S&P 500 most of the time. So take that for what you will. So now that I'm looking at it, I'm wondering, you know, I never did an optimization run. So let's try doing an optimization run. We'll do a reward factor going up to 10, and we'll use a target starting really small. We'll go from like 4 to let's do 96 ticks and increment it by 4s. I'll also do the trades allowed. So this, you know, I don't want it to be like trying to take it over and over and over again when it's failing. So let's go up to 5. Okay, that should give us a good number of iterations. And let me come in here and just turn off the really loud sound that it makes. Turn off the really loud sound that it makes. That should give me a couple, okay, 1,200 iterations. We'll see which one works best. Real traders use astrology to invest. Let's get this microphone a little bit higher so that sometimes I have the tendency to want to come down and sit up straight. It is taking it a little bit of time here. I don't have that tick replay number on, so I think we should be okay here. It's probably just taking its time to download the data. Yep. All right, cool. Actually was able to get one with a Sharpe ratio over 1. Which one? A reward factor of 3. Oh geez, that's so dumb. Okay, so that one, the reason why that one seems to be working so well is because we're on 5-minute bars I probably shouldn't allow it to be 4. So I was saying like the minimum target could be 4. So it's saying that like your target is 4 ticks and your stop is like 1 tick, right? The average losing trade is -1, right? Yeah, that's not very good. I would not trust those results. We could go do that, go like redo this one. Let's try and break this one. Okay. Order for fill resolution high, and we'll do it on a 30-second bar. So this will take a little bit of time to run to download the data, but this will probably give you more accurate results. See if it's different. So I'm very skeptical that you'd be able to have very much success with a 1-tick stop in the ES. Right? Maybe I should do it. Maybe I should have like a minimum be 40 and like a maximum be like 4 times that or something. Or just go by 10 ticks. Or let's say 5 points. Let's say 20s. Let's go by 20s. Looks like the treasuries might try and pop back up here. Equities are still looking heavy though. Yeah, rolling up a 30-second chart over that large of a time frame takes a long time. No. Okay. So can I complain about something else? So Tulsi Gabbard is tweeting, the U.S. federal government has just begun implementing a centralized digital currency project to bring about a cashless society. No, like, I hope they're not talking about FedNow, because that's not really going to be used. That's really just more of like a replacement to what is the thing that they use? To Swift. That's really just an alternative to Swift. It's not going to change anything. What is Joseph Wing talking about? When a deposit moves into an MMF, it doesn't necessarily decrease total bank deposits. In the first step, the deposit merely changes ownership from the investor to the MMF. Often the MMF invests the deposit and it ends up right back in someone else's account in the banking system. The recent surge in SOFR volumes to all-time highs suggests that government MMFs are increasing their private repo investments, which would recycle deposits. But in other times, an MMF's investment can destroy deposits. More recently, there is some increase in reverse repo rates and notable increase in bank borrowing from FHLBs. I don't know what that stands for. That would decrease bank deposit levels. Interesting. Okay, so do you see that one? The exact same test, but we're running a higher fill resolution underneath. Actually not profitable strategy, right? It was only profitable because it would see that, oh, within a 5-minute period, you did hit both your stop and your target. So I take my target instead. And once you start doing a more granular resolution, you see that actually the stop gets hit a lot and it's a losing strategy. Okay. So let's go back here and modify our targets. Let's start with one where a minimum is 20 and a maximum is 200 and increment by 10s. That I think will be a little bit better of a test. think it's going. I clicked the run button and the interface isn't really responding, so that I think that means it started. Yeah. Have you had any success with short-term trends? Treasuries seem to trend over 5 to 15 minutes sometimes. Well, kind of depends what you mean by that. So the trades that I tend to take tend to be like 30-minute trades or longer. And yes, I am taking trends, but I'm not just trying to go along with the trend, right? I usually have a reason to think before the trend develops that we're going to get a trend that day, right? So it's not trend following, is not what I would call it. Does that make sense? Or I mean, not that I think it makes perfect sense, but does that answer the question? I hope this is running. Come on. Oh, wait. Click run again. There we go. Okay, we're good. Yeah, trend prediction. I guess it's kind of maybe more the question that you're starting to ask then is maybe like, how possible is it to predict short-term trends? Well, I'd say that it's very hard, but it can be done as a retail trader. It's very hard, but it can be done. And I think it's very doable for your average retail trader to do it. Okay, so this one, that's so funny. I find these sorts of things so funny because when you start doing the optimization runs, depending on what you're trying to optimize, it will. So this one, right, only took 26 trades, right? So you can't pull out. That's not enough data to really tell what's going on here, right? Man, it only wins 23% of the time. What was the target that it was looking for? A reward factor of 6? Jeez. I don't know. Maybe the amount that I went for is too much. It's trying to optimize on profit factor, right? What if we changed it to be Sharpe ratio, max Sharpe ratio? I wish there was a way for me to go into this and say there needs to be a minimum number of trades or it discards it. Oh well. I guess you can kind of do that yourself by either creating your own optimization criteria. Maybe I should do that. Maybe I should do that. I need to find a way. To quantify how much kurtosis there is in the distribution that you're looking at, and ergo how many trades you would actually need. Okay, so here I got one to give me a Sharpe ratio of 0.87 and 145 trades. That's quite a bit better. It's still looking for a really huge target and reward factor, right? So it's looking for a target that's essentially like what? 50 divided by 4. So that's like what, 12 points or whatever. And then the target is like way further than that. So it's only making money on the super crazy big trends that we've had. The curve isn't bad though. What do you think of market microstructure? Yeah, you should learn what market microstructure is. But realize market microstructure is a pretty broad field of study, right? But the market microstructure as it relates to order flow and the order book and so on and so forth, there's some really interesting and valuable insight that you can gain about the markets from studying that stuff, right? And if you know, a lot of algorithmic trading, the basis of that comes from the market microstructure, because you want to have an edge that is like baked into the rules of the game and not necessarily just like people's tendencies or something like that, because those always change, right? But if it's built into the nature of the market, that's always going to be there, right? I think that if you are, this came up on Reddit the other day, and I commented on it, and I thought, this is really a good message that we need to hammer home more often, is that a beginning trader should be less concerned about the specifics of any one strategy and like trying to copy somebody else's strategy, and more concerned with the process that one goes through to develop a strategy. Because any strategy that you're going to find that's public information, or forms of analysis that are public information, they're going to lose some degree of edge because of that, right? You're going to lose some degree of edge because of that. So in order to find a good strategy, you're going to have to develop your own strategy, right? So the process that you go through to develop your own strategy is really, really important. That's the thing that you really need to be practicing, right? And how do you do that? You have to come in and you have to study the market. You have to do all of your testing and data collection and everything to find a statistical aberration in the market, and then find a way to make a strategy to trade off of it, right? So these kinds of like these things that we're doing here, where we're like backtesting sort of things, like that's an important skill to have. Every one of you should be trying to take a strategy like this and trying to write your own and do the back tests and see how it turns out. It seems like it's a really big thing, but the code for this is not complicated. I already did all of the hard work for you, right? When I put this out in a video, I'll have the downloads on Discord so that you can do this stuff yourself. Profile, eval return is what it's called, right? So I just say there's a limit on how many trades you can take per day. I reset that at the beginning of the day and stop if we've already taken a trade today. Otherwise, I will take a trade sometime after the start time, or within the time period allowed, which in my case is basically from the first 30 minutes before the S&P 500 until an hour after the open in the S&P 500. Okay. And then during that time, if we are below the previous day's value area and trending up on our moving average, then we take the trade. And that's it. It's that simple. That's all the code that matters right there, right? Close is above the previous day's value high plus our target, and the moving average is falling, we enter short. That's it. That's all there is to the strategy, right? And then you can come in and you can say, well, what if we did the opposite of that? What if this was a long and this was a short? How would that change it? Well, you can go and do that. Just change those things. Or what if I added this other indicator that I like? Well, okay, then do it. Try it. Very simple. Okay, so this one right here is a little bit better. Let's try this one with better resolution. This one, because the targets and stops are much larger, should be a little bit more accurate, right? Reminds me of the inverse bad strategy. Yeah. One of my favorite things to do is to take a strategy like, so like for instance RSI. People say, well, when RSI is below 30 you buy it, and when it's above 70 you sell it, right? Okay, so take a strategy where you do the opposite of that, and then add a bunch of other indicators and goal seek it to get it to show profitable, right? I think this is actually a useful exercise, because what it shows you is that with the right kind of curve fitting, you can make just about any strategy appear profitable, right? You just kind of have to adjust your parameters to the historical data well enough. That doesn't mean that it will work going forward, right? Well, once you understand that sort of a thing, then you kind of understand what are the things that I'm doing that cause that to happen and those traps, and then you can avoid them, right? Okay, so we were going to do a higher fill resolution on 30-second data. Let's see if it changes the profitability. It actually improved it a little bit, right? So because the stops and targets and everything were further away, and the amount of time that you're in a trade is a little bit further away, I find it curious that the average time in the market is 8 minutes. Because for as big of targets as it's taking, that's quite a long time. Here's the thing though. Well, there's a couple of things about this that is good. Sharp ratio is above 0.5. Profit factor is almost to 1.5. Okay. And it is making a decent amount of money. And there's 144 trades. So I could say this is something worthy of investigation. The big problem is we don't have 4 or 5 years worth of data. So if we can get Uzi to run this, and then it came out and this was still profitable after that, then maybe you really do actually have something, right? But for now, it's not a large enough time frame to really be sure, right? It would be I'd feel much more comfortable if it was like 1,000 trades and we got that, right? What else about it? So these probabilities that it's showing, 12%, I mean, that's good in general, because often it's like zeros. That means it is relatively consistent. The win rate though on this is terrible. Like, it's really YOLOing, right? And it's only winning 18% of the time, which is going to mean that in your analysis here, you're going to have pretty rough drawdowns, right? Pretty rough drawdowns. Still, there's a good amount of variability. The stats say that it's within line, but that has me concerned that when we get more data, that it's not going to perform as well. So good. Did you learn something? I think I showed you guys a lot of stuff about backtesting there. Jim Murio is all on about central bank digital currencies right now. I don't think that it's as big of a deal as they make it out to be. I don't know if, well, I guess who your president is and what he thinks about it does matter. Because Congress would really, the correct way to do this would be Congress pass a law and the president pass it. I think it'd be very, very difficult to pass a law about that though, without having real protections in the digital currency. Wait, what the heck? Question for President Biden in an interview: are you running in 2024? Biden: well, I'll either be rolling egg or the guy who's pushing them out. Jeez. Sometimes I sit here and I'm like, okay, I was talking about something, and while I was talking about it, I had a couple of thoughts that were like tangents that I ignored. And now we have a little bit of time. Do I want to go back to those tangents? But then I think about them, and I'll like go back and read the comments. And I'm like, okay, so what was the comment that prompted that tangent to my thought? And then I realized, no, it wasn't a comment. It was me. It was me inventing arguments in my head. Jeez. Let's come back to Zero Hedge though and see what the initial headlines are here before Google ChatGPT rival faces in-house resistance. The employees allegedly believed the technology generated inaccurate and dangerous statements. It does seem kind of, to me, I am starting to wonder. Well, let's read this a little bit first. A new report reveals that 2 former Google employees were vocal about their concerns for society over the release of the company's new AI chatbot. Artificial intelligence has become a major talking point with the rise to prominence of AI chatbot ChatGPT from OpenAI and generative AI image makers like Midjourney and DALL-E 2. However, not everyone sees eye to eye with this emerging technology. A new report from the New York Times revealed that in March, 2 Google employees tried to stop the company from launching its own AI chatbot rivaling OpenAI's ChatGPT. So just last month, huh? According to the New York Times report, the employees' jobs are specifically to review Google's AI products. The employees allegedly believed the technology generated inaccurate and dangerous statements. Microsoft employees and ethicists raised similar concerns a month prior, as it too planned the release of an AI chatbot integrated into its Bing browser. Concerns were voiced at Microsoft about the degradation of critical thinking, disinformation, and eroding the factual foundation of modern society. Nevertheless, Microsoft released its Bing integrated chatbot in February, and 1 month later, Google released its Bard chatbot towards the end of March, both which succeeded OpenAI's yes. Because the Google's Bard is out there, although it's still in beta. You're back? Welcome back, Walter. Since its release, yeah, they don't really have anything more in this Zero Hedge article, at least, than that. I am kind of starting to wonder, was it responsible to unleash this thing on the world when it gave inaccurate responses? Because I think that the people that initially did this thought that, well, okay, like, we all understand it's a chatbot though, and we all understand what it's doing, and we understand why it gives the answers that it does, right? But it seems to me that the average person can't make those kind of determinations. I find this is an issue that I run into over and over again, and I find very difficult, is that I don't know what other people don't know, and I don't know how other people are going to react to things. And to me, it's silly that anybody would take the answers that a chatbot gives as the golden truth, right? I would think that most people would think of it as a passing curiosity and or a way to increase productivity in some instances. But it doesn't seem to me, from just watching people talk about it on the internet, seems to me like most people are taking it more seriously than that. And ergo, there are some ethical concerns with just unleashing it in the wild if it doesn't always give accurate results. But at the same time, how do you ensure that it has accurate results, right? Because it's just taking content from elsewhere. So especially if it's like a political issue. So one choice is you could say the chatbot just won't talk about certain controversial issues. That's one way of taking it, right? But there's always going to be something where it says something and people disagree with it, and then you're going to say, okay, so I'm going to change it so that it will respond this way to that prompt. But now you're kind of determining what it's going to say, and there's problems with that as well, right? But then if you're going to say that's a problem, then isn't it a problem for even just regular people to talk about those sorts of things? Because regular people can be wrong about that stuff too. Huh? It's almost like if we're going to say things, if we're going to make claims about the world, that we should be able to back them with facts, and that our conclusion should be based on the facts and not goal seek instead. Yeah. Because just like with the backtesting, if you're goal seeking, you can get the backtester to say what you want it to. Yes, now it's also, some people said that there was a problem with it and they ignored them. And that's what these tech companies do over and over and over again, is that whenever somebody comes up with these kinds of concerns, they just, this is not the first time that there's been this kind of an incident at Google where the people that they hire to do ethics and technology and AI and so forth voice concerns, and then the bigwigs push it through anyways, and the people that were concerned just get fired or quit. Well, the S&P 500 is going here. It looks like on the open they're buying, but they're not making much progress in price. So this is a little concerning. I do see a tiny little bid here in the treasuries. We've actually traded a reasonable range here for the start of this session. Enough of a move down to at least be cautious taking the longs. But nothing else this morning. Elon Musk Starship launch trending towards near the end of the third week of April. Now on the split side of this, I want to take these models and pass my own data into it and do stuff with it. I wonder how that'll turn out. Still a lot of work to be done though. I'm kind of preparing myself because I'm kind of seeing how this technology is in its infancy, and so I don't think that all of the tech for me to do what I want to do is necessarily there yet. But I'm kind of preparing myself so that when it is there, I will have the processing power and everything to run it. So you can't really see it, but I got these conserver cases, but they were the wrong kind, so I'm trying to sell them. I got one of them. Now I got to figure out how to ship it. I think I might just take it over to UPS and ask them for a box. Actually, no, there's one box here that I might be able to use with it. Plus, it's a big metal server, so that kind of helps in terms of like what I actually need to do to pack it. Just probably needs a little bit of bubble wrap and it's probably fine. Good morning, D. How have you been? Yep, I've got a rack. See, let me see if I can. I don't think there's really anything to see. Do you see them there down on the floor? They're just the Rosewell ones, but the back of them do not have expansion slots. the back of them don't have the expansion slots. Let me adjust my camera here. Get me centered again. So I was able to sell this one on eBay for more than I got it for. I got them on a really good deal, so it was worth the risk. But I'm kind of thinking that once I get rid of these two, I will just go and buy a nice case. There's like $300 ones out there. I'm just gonna have to, if I really want to go this rack mount route, I'm gonna have to splurge a little bit. Have you been on holiday? I was noticing, I was like, I haven't seen D recently. I guess doing it rack mount is kind of fancy. What's funny is that the initial driver for this was the cable management a little bit. So like I have a UPS, and having the UPS and the PC next to each other and having all of the cables going into that like it's just a big mess down there. So if I have a rack and I have a rack mounted UPS, then I'm able to do it more neatly, right? And then I just started, going wild with it. I was like, well, and I can start putting these networking components in there, and I can have multiple machines in it, and all this sort of stuff, right? The big what would we say, like, question or concern on that one is still the rack is over here, and the outlet for the network is on the other side, and I might put a desktop where that chalkboard is right now. When we get the new desk, I might just move the old desk and put it over there, and set up a new machine for that. So if I wanted that new machine to also be in the rack, right, I'd need to put it on that side. But then that would mean that when you're watching my videos, right, in the background, instead of having like the plants and stuff, you would just see the server. And I don't like that as much. So maybe it's a good thing, but I don't like it as much. I guess I can put the plants on top of the server rack or something. So plus I'll probably have to get some new cables to deal with it. But I'm gonna get that desk finished first. It's taking so long. We got started on the metal stuff this time. We made the little, like, there's the little levelers. We made those, and we started making the legs. Yeah. And the big thing that's missing is we need like a plate, like a thick plate to weld the legs into, and then that plate will go into the table, and there needs to be slots cut in it so that the table can expand and contract and so forth. Yeah, so I gotta do that, and I gotta find a piece of metal. That's probably the biggest roadblock right now. See, I've been spending more time on that and I haven't been making videos. I think maybe next week or the week after that, I'll be able to make the next video on the volume profile stuff. It kind of depends. I've got to get more data. I've got to get data that goes further back. But get data that goes further back. And then next week, I think I'm going to be doing the garden. Oh, let's check that. What does the weather look like? Oh, I have this thing about Ireland. I never looked that up. Okay. This is this thing that you claimed that non-government organizations like Cooperative Housing Ireland will play an important role in achieving social housing targets this year. They will provide more than 40% of the country's new developments in the area. That's very different from what you tried to portray it as. Okay, anyways, what is the weather? Avalanche warning issued. Yeah, of course. Weather. Oh yeah. There's a little bit of maybe raininess coming next weekend, but that will still be relatively cool. Oh man, they're getting up to 77 tomorrow. That's not ideal. That's gonna melt your snow awfully quickly. You get into like the 80s and 90s in the valley, that's when the snow starts melting really quickly up in the mountain, right? Oh man, I thought maybe the treasuries were gonna move back up, but they got slammed back down. Seems like they do have a good meta order short. I was not expecting it. I was kind of more looking to go long today. Interesting. And what levels are we getting to here? Okay, so we're kind of back into the area from April 4th. That's interesting. Yeah, so if the weather's going to look good next week, then probably I will finish my garden. So what I really need to do is I need to find gravel. Fun project in the works, yeah. It's not going to be fun though. It's going to be pretty. It's going to be pretty rough. Because it's going to be carrying rocks, right? So the back of my yard is like terraced. So I'm going to have to, dump a bunch of rocks on my driveway. Load them up into the wheelbarrow. Wheel it all the way around into the back, up the 3 steps of terraces, and then setting it down. It's going to be rough. I'm going to be rough on the body. Yeah, they got, not only did they get smashed back down to the lows, but some stops. and a little bit of buying in the S&P 500 as it happens. And the dollar moving a little bit as well. So it looks like we continue to get this inverse relationship where when the dollar moves up, the treasuries are getting sold, and the Japanese yen is getting hammered as well. And that's what I think I want. I was looking at what types of gravel are there. Royal gravel. Blue grayish, yeah. Except for that, I don't really want an angular. I want something that's a little more rounded. So that if a child falls on it, it will not hurt them. How far is it gonna go? Let's reset things right there. 115.16 tends to be an interesting spot. How much have we moved here this morning? 3 basis points? 4 basis points? There haven't been any news this morning either. I think that we did kind of have to expect the market to move a little bit after the weekend and everything that happened last week. Just was not so hot on it dropping so much in the treasuries. That's curious to me. Unless people are betting on the CPIs being bad. That's what I'm thinking about now. Are we going to get bad CPIs? You say the twos aren't as weak, so it is steepening. Yes, you're correct. Although there was some flattening earlier in the morning, that seems like this steepening is a reversion of that. Tough. I would say that this is a little bit more of a move than I would have anticipated, and it makes me wonder if we're missing out on something. I don't know if it's, I don't know. I don't know. So, like, if CPI was bad, If CPI is bad, that would really be the worst scenario. Is like we're already getting stagflation in the economy and they have to raise interest rates even more aggressively. It would be like really... that would be really discouraging for the markets. I'm sure that the markets would sell off on that. What is one of the primary causes of US dollar demand? I hear about collateral liquidity, dollar shortages, and the over-the-counter. Not sure if those are different components of basically the same. Okay, so like one of the things is that you need, you have to have a certain amount of reserves to be able to carry out transactions, right? So if you don't have enough, then you go and you borrow it from somebody else. And that's typically what you're hearing about with that sort of stuff. It's like over the counter dollar loans, like reverse repos and so forth, to get funding for what you have to do that day, right? So something that commonly happens, for instance, is towards the end of the quarter, you know, there's a lot more payroll needs, and so the banks have to take on need more dollars in order to meet payroll. And that was why we had that crisis in 2018, 2019, whenever it was, the repo crisis, where the repo rates were skyrocketing because there was somebody that needed cash and they couldn't find it. There wasn't enough dollars out there. And so the rates that they were having to pay for overnight repo was too much. There's another 2 ticks, man. This is like not stopping. I do have to wonder, this could just be all about the Japanese yen. So the Japanese yen, there was some comments from the Japanese central bank over the weekend or in the morning here. Where it used to Zero Hedge had a story that was where Easter Monday is a public holiday. I really sometimes I wonder if they watching me. It's like, oh, we're talking about something, and then I see it on Zero Hedge, and I'm like, Zero Hedge, if you're such a what is the word? The loyal viewer. Zero Hedge, if you're such a loyal viewer, could you please, number 1, unblock me on Twitter, and number 2, like maybe mention me once or twice. That would be. With this layout, do you find it easier looking at old reviews when doing reviews versus your old layout? Which old layout? I mean, we've changed it many times, right? When we had things like way early on, where there was a chart at the top of every DOM, that was a little bit easier to like click around on the video, because you could say, okay, this is the spot on the chart that I wanted to find, and then you can rewind until it looks like that. I don't know if it was so useful of a feature that it would justify switching back. Why were you blocked by Zero Hedge? So Zero Hedge had a comment thread that they had made about cryptocurrency's use of renewables. And I pointed out that even though you might be using renewables, those are power. That's power that would have been used for something else. Like, that wasn't power that cryptocurrencies generated. That was power that, like, those municipalities or whatever were always making. And so even though it's renewable power, it's power that would have gone to some other use. And so just because it's renewable doesn't mean that it's like carbon neutral or whatever. You're still increasing the overall energy consumption. And at the time, I think that Zero Hedge was kind of like, number one, concerned that maybe they were being created by robots or something. But then number two, I had just made a number of comments on their posts as of recently that were anti-crypto and were quite popular. And so they blocked me because of that comment. Pretty shitty, right? But that was the comment that I had made before I got blocked. Was I had made a comment that was very popular on one of their posts about Bitcoin's energy consumption. So it's they try and present themselves often as a champion of the people, and I feel like that's bullshit, right? I think that Zero Hedge always goes for the panicky headline. Like, I think that they very much intentionally try and stir people up and make panicky headlines, and the market's always about to fall apart, or this thing is unjust, or that thing is unjust, because that's what gets them the views, and they know it. That's what gets them the views, and they know it, and they play into it as hard as they can. So they're never like, I mean, if you really read into them, you might be able to see, well, the analysts are expecting the markets to move up a little bit here and things like that, but they're never optimistic, ever, right? The headlines are never optimistic. And then they absolutely push their own agendas, right? Like, they're constantly bro get Bitcoin, bro gold and silver, right? So if I come in here and like tear apart some of the arguments that they're making for it, they didn't like it. They didn't like it. They blocked me. That's their prerogative, I guess, but sometimes they say stuff that I would like to see. They'll leave a comment and be like, oh, I wish I had seen that at the time. Man, these treasuries are still pushing even further. So, like, we're already kind of reached a point where I feel like that it should be difficult for them to move further. But so far, they don't seem to be slowing down. I'm very hesitant to try and take a trade in here. They're not slowing down, man. And the Japanese yen in particular seems to be pretty consistently getting hammered here. So let me see if I can find the story where we got information about what had gone on. Here we go. In his first public address, the new governor of Japan's central bank disappointed policy hawks as he signaled that he plans no drastic change in its ultra-low interest rate policy, sticking to earlier messaging on the topic. Markets have calmed, and as far as the impact on the Japanese system, we have maintained the easy monetary policy, and there is ample capital and fluidity. You see some breaking news about JPY intervention? I do not see that. Where are you seeing that? if that's true, then I want in on that source. Ueda's inauguration comes after his predecessor, Kuroda, presided over a decade-long monetary stimulus program centered around 0 or minus long-term interest rates to nurture economic activity. Most Bank of Japan watchers expect some kind of policy tightening by June, but Ueda's comments poured cold water on that to some extent. Right now, the yield curve control is considered most appropriate for the economy while tending to the market functionality, he said. Given the current economic price and financial conditions, I think it is appropriate to keep up the current yield curve control. The action was swift, with yen dropping to its weakest in a week. Right? So when Japanese yen is moving down, that decreases demand from treasuries, right? There's some pretty decent volume behind this decline, though, too, in the treasuries. And another thing that can happen is if the Bank of Japan is going to intervene, sometimes they have to sell their treasuries in order to turn around and buy the Japanese yen, right? And so, well, you say that was on Twitter yesterday. But if that's going on, that could well create the kind of flow that we're seeing, right? And who knows how much it could push, because when you got countries doing stuff, those are monster moves, right? Those are the kinds of moves that will go all day. What a news day. Well, there hasn't been very many breaking news headlines that we were at least super aware of, but it looks like there are definitely things going on under the surface, right? It sure looks to me like somebody was just waiting for the market to open and the liquidity to get here to come in and sell the treasuries for sure. We're one time framing lower. Does anyone have an idea how I can access free demo feeds for NinjaTrader? Did they change? Oh, you can't just get it? Pretty sure that there's still the thing, right? You come in here and you say, get started. And then you have to register an account. But then once you register an account, I think you can set up a demo. I think that's how it works. Yeah, and you can still get the platform, but the way that works is it's gonna ask me for an email and all this junk. It's not letting me in. I'm not a huge fan of the new interface, to be honest with you. You think that there'll be a correction in the dollar? It's certainly to points over here in the treasury where I feel like normally we would reverse. The dollar is kind of turning. The problem though is that this is the dollar that's driving. What's funny here is that I came in, I tried to log in. It said, oh, you need to approve your device first. So I go back and do that, and then I log in and it just goes back to the front page when I log in. So that's not right. I think that once you're in though, you have to like, there's a place in your account interface where you can do that stuff. I'm pretty sure you can still get like demos and stuff and use desktop. They sure are pushing the they sure are pushing the web version though, aren't they? Maybe I'm gonna do an indicator or other stuff as a software project for college. Oh, that might be fun. Especially if you can do something like advanced or like AI. It's gotta be AI, right? For Ninja Trader, my thought was a good DOM like Jigsaw for Ninja Trader and add-on. There are some, in fact, there's an open source one out there that's not terrible. At least I think it's better than the default one. But see, look, they're pushing again. This is really looking like a meta order, man. So I don't know about if I can really try and chase this thing, but I think the YOLO play here would be to go and turn around and buy the Japanese yen in hopes of an intervention or something, right? I'd have to go back and look there. I've spoken with the guy before. He has it on GitHub, but I forget the name of it. Trading economics. Well, I tell you what, I tend to use the Forex Factory calendar, and the only reason I use that one is because I can see the historical data. I can see what it's been doing recently and stuff. Because when we first was like, okay, when it first kind of started to pause, we were like 410. Eyes are watering here a little bit for some reason. Man, look at that at 13. Good grief. Missed it. I saw that order sitting there at 4.3 half, and I was like, oh, I've got to hit that. And I switched it, and I tried to click it as quickly as I could, but it had already clicked up. That move there, though, sure seemed to get a reaction. You can't find the earnings calendar on Forex Factory? Like, really? ForexFactory.com? And it should be like the first thing, like literally the first thing that you see. Oh, you want an earnings calendar? Oh, earnings calendar, not economic calendar. Okay. I like the economic calendar because you get these graphs. Okay. For earnings calendar, let's see here. You said that you like trading economics. Oh, I don't think they've got like a real calendar. Category. How do you get to their earnings? How do you get to their earnings? Oh, they kind of have this. It's not quite as good of an interface for that, but where is the earnings part? Category: interest rate, prices, labor market, GDP, foreign trade, government, business confidence, consumer. No. Okay, but here's the one that I've found in the past. MarketChameleon.com calendar. If you pay for it, it's even better. But I can come in and I can see what all of the earnings for today at least are. Markets. Oh, markets, stocks. Oh, markets, earnings. Ah, yeah, that's not bad. This one over here is, I think, a little bit better. So I'll post the link in here. So this one, it shows you how much they moved last earnings, how much it's moved this time after it happens, and you can like sort it by market cap and stuff. So that's useful. I don't think that you can on these ones though that you can like look at the history. You can come in and you can see this other stuff about it though. Okay, that move, yeah. So when that happened, I kind of thought, well, I can try and take a small one. It seems thick. I think that last move might have done something to the liquidity and stuff, because I don't think that now would be a very good time to try and trade it. Okay. Oh, hey. Trading Bunny, you were kind of asking a question about this. This post illustrates some of the mechanisms that increase or decreases at the bank level of bank deposits. The focus on monetary aggregates was not useful in the 1980s and is even less useful today, as Fed actions can significantly impact deposit levels. So this is from Fed Guy. This is an article worth a reading later today if you're interested in that sort of stuff. I do wonder if if the curve flattens back out. The fact that we steepened here really does support the idea that it's because of the Japanese yen, right? I'm a little surprised. I would kind of think that the Bank of Japan governor coming and giving his first speech and not really surprising the market should not be a surprise. Not surprising should not be a surprise. They always try to minimize their impact on the market unless they really want to do something, you know? So the market could be overreacting here to it. But one has to wonder if the Japanese government is not involved in this sell-off in the treasuries, right? Yeah, they reverted back up. I think they might make it back to 16. Oh my gosh, why am I yawning so much today? It's got to be because I've been having a flare up with my gut, and it makes you really tired. Makes you really tired. Well, anyways. Let me come over here and refresh this tab, by the way. I was gonna say the stream seems a little quiet today, but yeah, it has been a little quiet today. I don't know. It's a Monday, I guess. I guess it's a Monday. I suppose you could try reversing this here. I don't know if that's a good idea, though. Like, I think you're gonna get somewhat of a reversal, but there's just not very much in it for you. Oh, you say IMF meeting in 45. So I was aware that there was an IMF meeting today, but everything that I had seen on it marked it as an all-day event. So this is the first time I can recall something like that, seeing that on the calendar. So I hear on my news squawk ECB's Takos saying stuff. So I guess we get speeches. Well, the dollar has not turned around too much, but we are getting a little bit of a bid in the equity market. To, I think it was Live Action's credit. He was saying maybe the dollar will turn around here and equities can move up. Well, didn't quite work like that, but it is moving. Consumer inflation expectations. Where are you getting that? I do not have that one on my calendar. Hold on. Yeah, I don't have that one on my calendar. They sure are coming back up there fast, aren't they? It doesn't show. Well, I've found that all of them will seem to leave something out. But I'm not saying that from Forex Factory. I'm saying that from Financial Juice. So Financial Juice, the numbers that I get are fast. But if you say that you're looking at, but I don't see that on investing.com either. I don't see anything at 8:30. Current time 10:20. I don't see anything at no, all I see is IMF meetings. And then 3-month bill auction in an hour. So where are you seeing consumer inflation expectations? Because that would be a significant number. Pretty sure I would know about that one. Are you looking at the right week? The right day? Isn't that something that comes out with consumer with like the CB surveys? Consumer confidence surveys and stuff? You got it on trading economics? I don't see that here either. A30 is about, well, why were we supposed to be selling on Thursday? No, I don't think that's right. So on Thursday it was well, there was payrolls, but there was something else that day too. What was it? Thursday. No, it was just Canadian news and unemployment claims. But I think that let's see here. So let's come back here to our volume profile. So that would have been the 6th, right? Yes, that's correct. So I think what happened last week, Lucas. So this was Thursday, Wednesday, Tuesday, Monday. So starting here from Monday, there was somebody basically front running the news through this whole thing. And it looks like what happened was they set themselves up to take their profits before Friday. So on Friday we had a big move down, right? And now today we're extending. I think that this big move down was these guys that were buying through all of here taking their profits. That's kind of what it looked like to me based on the context and how the tape moved at the time. This move right here is probably BOJ, right? This move is probably related to the Bank of Japan stuff. So yeah. By the way, today's biggest winner so far is natural gas. Everything else is down on the session. Yes, is sandbagging. Yeah, I don't know if it's sandbagging. It kind of seems like the equity market doesn't see a reason to be moving here. These are dangerous trades, though. Front running what news? Well, so there was the manufacturing PMI, there was the services PMI, there was the ADP jobs data, there was the job openings data, there was the unemployment claims, and then of course the non-farms on Friday, right? So I had been following this trade and I thought, oh, this looks like this is a good opportunity to go long and stay long. But I was doing so on the theory that all of these numbers were bad, non-farms would be bad, and that they would hold the trade. But what happened was the big guys took profits early and just didn't really play the Friday. Does that mean they had the information beforehand? Who knows? I've never and before every single one of those pieces of news that I just mentioned, so like all 4 or 5 of those, there was significant movement in the direction of what the economic number was going to be before they came out on every single one of those. So, you know, there are people out there that have ways of estimating what the numbers are going to be, and they might try and play their estimate versus what the market, what the government's report actually ends up saying and stuff like that. So it could be people like that, but it's seems unusual to me. Like I will see every once in a while they'll come in and it seems like somebody's front running the news, right? But not 5 times in a row. 5 times in a row is very unusual, isn't it? I felt like it was suspicious. Engine didn't make any sense unless it was informed flow. I seem to recall on Friday, what happened was the news came out and it was what I wanted, and we saw a spike up. And then the rest of the session, it just kind of was like a slow burn to the downside, as low, though like nothing was happening. And like they weren't able to hold their gains. So that I think would be very much in line with like profit taking. So I wouldn't even necessarily call it informed flow. I think it was just profit taking before Friday. They didn't want to play the non-farms. They wanted to be out. Maybe they knew that like these numbers are likely to be bad, but non-farms is probably going to be close to inline. But for whatever reason, like the flows switched there after that Thursday. They got the spike that they wanted, and then after that it was all sell. Oh look, we did finally get 16. The 30-year though didn't come back as much, so you're not getting the 3.410 like we did before. But it's just like this one that I don't think that this move is really makes much sense. But you know, it's all about flows. The flows that will move it don't necessarily make sense. They aren't necessarily informed. We got to be careful about, oh, it's a really strong flow, that must mean that it's informed flow. I mean, that is often a very good reason for it to be informed flow, but it doesn't have to be informed flow. And I think that this one may not be informed flow. It may be driven by what's going on in the Japanese yen. So that kind of makes me cautious to try and chase it. I'd seen an opportunity to catch a little bit, but as soon as I started trying to play that, right, it had immediately come back on us. So did not get as much favorable excursion on that as I would have liked. I didn't get filled, so I didn't take the trade, but if I had taken the trade, I would have had to have scratched it. So all things that I think we're going to have to keep an eye on going into Wednesday when we got CPI, right? So if that CPI ends up being high, then that's really going to upset the market, I think. Because the current economic numbers already don't look good, right? Current economic numbers don't look good. Chinese aircraft carrier seals off Taiwan, sends 58 planes to Buzz Island. This is the lead story on Zero Hedge. What else? Consumer debt climbs, but pace slowing. Intensifying PC bust. Apple shipments suffer largest blow. Even with heavy discounting channels and PC makers can expect elevated inventory to persist. Well, that's going to be good for us. Now is probably a good time to try and buy the hardware, right? Let's read that. The end of the biggest pandemic-fueled personal computer boom has been ugly, and it's still not over. New data via International Data Corporation's worldwide quarterly personal computing device tracker shows quarter shipments were around 56.9 million, or about a 29% decline compared to the same quarter in 2022. IDC blamed continued weak demand, excess inventory, and worsening macroeconomic climate as contributing factors to the drop in shipments for the quarter. The results also show the era of COVID-driven demand and at least a temporary return to pre-COVID patterns, the report said. Shipments were in quarter one were more than the 59.2 million units shipped in first quarter of 2019 and 60.6 million in quarter one of 2018. Even with heavy discounting, channels and PC makers can expect elevated inventory to persist into the middle of the year and potentially into the third quarter. Jitesh Ubrani, research manager for IDC's mobility and consumer device trackers, said in the report. Among the top computer makers, Apple Incorporated's computer shipments plunged by 40.5%. Lenovo Group Limited, Asus Tech, and Dell recorded drops of more than 30%, and HP was down 24.2%. The continued demise of the PC market comes as no surprise to readers. We have pointed out the bubble and shown the unfolding bust for nearly a year. We even said the bust cycle might not experience a turnaround until 2024. Recall that we also outlined how graphics cards, memory chips, and monitor prices have plunged in the last 2 quarters. There's a great deal. Although I'd have to say that computer graphics cards are still a little too expensive for my taste. It is now time to upgrade the home office if you didn't buy it. Yeah, I think so too. I think that you might want to wait until a little bit later in the year, but like if you're looking to build a new PC, it might be a good year to do it. But maybe I just feel that way because I've been planning on doing that. Well, they did get back to 16, but it still looks a little heavy. That may just be the market maker holding it there, because I'm not really seeing the selling anymore. I think that the meta order may be over. The dollars look. I don't know what makes you think that, live action. after that amount of trend, I would certainly be kind of thinking, this has to turn around at some point, right? But felt like they're at the highs right now. Hasn't, like, there was a little brief tiny move a little bit lower and it just came right back up there. And like, while the treasury has kind of been in this pullback, because I do think that the liquidity was strained there and everything, the Japanese yen has continued to sell. So actually a little bit of a divergence between the treasuries and the Japanese yen here. It's a little bit late in our session now, and it's a little bit of an odd time, but I don't understand why you would be so just going from the perspective of we're trying to predict flows and so forth. I'm not sure what it is that we would have in the S&P 500 that would suggest a really strong move to the upside or anything, right? That's like, I'm sure there's plenty of technical setups in there, but I don't think that that's going to be very predictive of the flow. I would expect maybe the S&P 500 tries to pull out a little bit of a rally here, but I don't think that they're going to completely retrace that overnight movement per se. I think I'd be expecting a smaller little move, like maybe if we had upside it would get to like 4120. Then when we got there we could take another look. But the treasury still looks heavy, man. Like they could, oh man, I don't know, you gotta watch. This is one of those situations where like you think that this liquidity down here at the bottom is gonna hold and they just plow through it. Like, look, we're back at the 4.435 already. Already moved quite a bit. I want to like bounce my leg. That's how I'm feeling this morning. But it just makes the whole desk shake. I don't know if you can see the camera shaking a little bit. Probably should stop that. That'll be one of the nice things if I ever finish this table. It's taking forever. If we ever finish this table, that's that. It's going to be much more solid and it will not shake. It's going to be heavy duty. A little bit of clicky clack action over there in the S&P. What's this? Discovery Trading Group, anti-fair porn disclaimer. Recall the discussion on CDS's liquidity and how big one-day moves can easily be repriced or not. Even decent moves in swap spreads don't mean much unless or until you see them sustained. That said, look who made the top IG paper movers today. Waste Management. Goldman Sachs. Oh. Goldman Sachs and Citigroup. Arch and Lamb. So what he's saying is that the CDS movers, which CDSs are moving the most, there are some banks at the top of that are concerning. Well, City is up this morning, pretty decent clip, and Goldman as well. I mean, the overall index is up, but it seems like some of those banks are actually doing better than the index at the moment. So don't know. That might not be a significant thing. In addition to natural causes due to economic forces, etc., the bleed from regionals over into T1 banks is definitely on the street's radar, whether warranted or not. Collective sentiment is the single most powerful market force, whether legitimate or not. Smoke/fire? Question mark. Feeling the sleepiness coming on to me for some reason. That's interesting. Yen is still going. It's not dragging treasuries with it so much anymore, but the yen is not slowing down, man. I'm gonna zoom in on that one a little bit. Doesn't look well. Yeah, I mean, it only moved 10 points, right? But 10 points on a single contract is still like $1,000 or something, right? Let's see here. 1 point is 50. It's $500. So if you had 3 contracts on, our view of how much what is a move in the S&P 500 is so twisted now, right? Because I still remember back to the days where 1 point was a reasonable amount of movement, you know? I kind of wish that they would change the size in the ES to make it back to that, because it just moves too much now. Oh boy. Cracker Barrel is under fire for its politically incorrect name. Are they gonna force them to change their name? I don't think that they would go along with that. Training is like a dance when everything's on tempo. I don't know, man. Like, it seems to me like the treasury is moving and everything else is not. Oh, actually, oil's doing something. Oil's taking a little move down here. Is that really the origin of the name for that restaurant, though? Or let's call it Old Country Store. Ah, geez. It's something we got to talk about too. Well, we only got like 5 minutes. I always get into some like a really good topic when we're about to get going. Did you see how well the Mario movie did over the weekend? Oh my gosh. Like, so they made like 300 million or something in the first weekend. And like they might make well over $1 billion, like net when all is said and done, because I don't think that's even gone live in Japan yet. So like that's like more than you make from like making the full game, and probably a lot less effort on Nintendo's part. So you know what's going to happen, right? People are going to start popping out video game movies like it's, like they were Marvel movies. This is where it's going, right? So it used to be Star Wars and comic books were like the geeky thing, right? In the 70s. And they finally found a way to make it into movies and make it successful. So now that you've finally had a real, like a super successful video game movie, everybody's going to start making video game movies, right? I think so. I think we got Mario now. Probably they do a Zelda one, maybe a Metroid one. Like there's all those properties that Nintendo can take advantage of, right? Probably should be a Yoshi movie next, right? And then all of the other guys will start doing it too. Then everybody else will start doing it too. Then it will be like Metal Gear Solid the movie and Half-Life the movie. Half-Life the movie would be dope AF. Maybe they could take another shot at a Warcraft movie. I didn't think the Warcraft movie was bad. Wasn't very good. That's what's gonna happen. Yep. Video game movies. And then after video game movies, what's after that? What's after video game movies? Oh, I had it, and it's left me with the next thing that the movies are going to invade and ruin after movies. I can't think of it. Oh well. I'm a little concerned. They're gonna and I tell you what, is they're probably gonna try and make all of your video games woke and stuff, right? It's like, oh, and there's the other one is Among Us or whatever, right? That's doing pretty well on HBO. Yeah, I'm pretty sure that video games are going to be the next thing, the next hot thing. They had comics, they had superheroes, and now video games. Yeah, probably. Well, there's something more recent than video games. Like, what is the really nerdy thing after video games? Oh, anime. Yes, no, that's what it's gonna be. Yes, that's right. They're gonna go all crazy making all of these video game adaptations, right? And then they're gonna switch. And it's always been like this, like, right? They have a couple of adaptations and they like really failed. Like Netflix tried to do the Death Note adaptation, right? And it was blue chunks, right? It was just awful, right? Yeah. Once they're done with video games, it will be anime, right? They'll make a live action Neon Genesis, a live action. Oh, you have to have a live action Attack on Titan. I mean, come on. Have to have one of those. Maybe they could try and do Death Note rom-coms. Oh no, I'm telling you, man. Your Name, the movie, it's gonna happen. It's gonna happen. And then everybody will bash it because it's about body shifting and stuff. Will be derided as transgender propaganda or something. Do I think that there's more to this today in the treasury? I'd say it's been about an hour. Doesn't seem like we're getting another really strong meta order leg here, but that the market overall is still kind of selling. So I think we could see some lows. I don't know if there's much opportunity left in it. We've been at 3.435 for quite some time now, right? And the S&P 500 still having trouble like staying above 4110. So I don't know what to make of that one. Like, you would expect them to be pushing really, really hard for a gap fill today, right? And doesn't seem to be materializing this time. Doesn't seem to be materializing this time to me. So training the ES is like dancing. Where do you guys come up with these? I've never danced the cha-cha, so I guess I don't get it. You're too cultured for me, Lefta. I don't know, man. If I had stuck to ES trading and hadn't moved back to the treasuries when the micros came around, I think I would be very, very frustrated the past few months. There has been a lot of equity movement that is just frustrating churn, right? Like, it is just grinding people up out there. It used to be in the 2021, like, everybody was making money, and the retail traders are not doing nearly as well now, right? Most of the comments that I see on like the subreddits, most of the noob posters are like struggling now, whereas before it was like these noobs that had no clue, were making tons of money but had no clue. And the cha-cha-cha, you go one way and the ES goes the other. Back and forth, back and forth. Yeah, you went long the ZN. I really was not expecting a big move today, so I'm quite surprised that it went. It would have been a good trade if I had done it, though. Huh. But I was kind of leaning towards the long side. I'm kind of wondering here, is this a sort of a thing that we have to worry about later into the week? Well, nah, I think this might be just a one-day thing. I think probably what CPI is on Wednesday ends up mattering from here, right? And then we'll see what it does. But much stronger news than I was anticipating. There's our ding that it's time to think about getting going. What? What's the ESV block right now? Well, my regular session VPOC says that it's 4107. Although I would have to say that this distribution is pretty Gaussian. This is not this, or sorry, not Gaussian. It's not. This is random. This is showing more of a random distribution than we normally get. What's the best way of learning options books? I'm sure there's some videos that go, you know, I have my one video about the gamma that is somewhat informative on this subject, but I don't go into all the different types of options. Maybe I should make a video like that. I don't know, but I'm sure there's plenty of resources that have similar things. Sure, there's YouTube videos or books. You're going to go into the basic types of options trades and stuff. Options are so difficult. I don't know if they really are, Walter. I think if you really try and get into it, what you're going to find is that it seems like a lot of stuff and that it's really complicated. But once you memorize what all of the terms are, I wouldn't even say you have to memorize it, but once you understand what all of the terms are and everything and the definitions, that it's actually much simpler thing than it seems. It's kind of a deep thing. It's like, okay, well, you have all of these things that interact with each other, right? But that creates a very, very complicated system of dynamics underneath, right? I use a 2-day volume profile. Okay. So for those of you that missed it earlier on in the session, I have been working on putting together an indicator that is better at showing you the historical volume profile levels so that you can better backtest these. Because right now, if you want to backtest something based on previous day's point of control, very difficult, right? So with this, it's cached and it backtests almost instantly. So you can do whatever kind of setup you want. We just have to get somebody that has several years of data available to them. Hoping that Uzi can do it. If you have a NinjaTrader and you can see more than 1 year back in volume profiles, then let me know. And we get all that historical data, and then you can backtest those. But I was backtesting just to a year, recent, like 10 months, I guess. It was back to July. On a return to previous day's volume point of control, and it was it was iffy. Kind of depended on how much risk you took on, but like in order to make it work, the probabilities weren't very good. You had to like really YOLO them for it to work well. So yeah, just learning those Greek things. I gotta tell you, this is something that I think we've kind of lost sight of in more modern society, because you can look things up on the internet so easily. You can use a calculator so easily, but there is real value in memorizing things, guys. Like I just memorized the monthly codes for the CME contracts, right? So January is F. So you got FGH, January, February, March, and then April is J. May is K. June is M. July N. And then we skip to Q for August, Q U for September, V for October, X for November, and Z for December. See, I can do it from memory, right? It's beneficial. It's a small thing. You probably get along fine without it, but It's beneficial. Memorize things. Memorize what the different types of gamma mean. Like all of these terms in our industry, you should know them off the top of your head, because when you memorize it, it becomes second nature, right? They had an issue. Well, the issue is, like, can you even open up it? So the test that you should do is open up a volume profile chart, right? And then try and look at a date that's further back than a year or 2 years, right? And you're going to find there's going to be a certain point at which it doesn't load it anymore on every platform, guarantee you. Unless there's some platform out there that has the data cache and I don't know of it. So getting what the volume point of control was for the previous day from 5 years ago is much more difficult than I thought it would be. And if you have that data, that is, if you get the point of, then send it to me. Like, create a spreadsheet or create an indicator that exports it to a spreadsheet, and you know, put, okay, here is the date, and here was the point of control, the value area high and the value area low, and just do that for every day for the last 5 years. What's the point? What are we trying to achieve from the backtest? To prove that there's not really an edge in it. Or to quantify what kind of edge there is in it. You just have to configure, and no, I'm not just talking about the price, because I can see prices that far back, right? But I need to see the point. I want to know the point of control, value area high, value area low for every day in the S&P 500 in the last 5 to 10 years is what I want. So I want to know the daily point of control, daily value area high, daily value area low. Like what the volume profile looked like at the end of the day. So if you got data that goes further back than 5 to 10 years, then I would appreciate it. And like, yeah, it's CSV. And we want it as a CSV. Yep. So only daily recorded value area low, value area high, and VPOC. Exactly. Exactly. And then you put that into your cache file, and then my indicator in NinjaTrader can load up those values from the text file instead of having to recalculate them all, right? So that when you do a backtest, it's instant. And then you can do real backtests against volume profile setups to see if there really is, because what I'm finding is, like, the basic setups that people talk about, it kind of seems like you might be able to get something to work, but it's kind of iffy, right? Yeah, if you find it, DM me on Discord, and it'll be part of the next video that we're making. Because it's kind of funny because I'm kind of anti-volume profile, but I think I'm gonna create the best resource out there for. It's gonna be a video that everybody that wants to trade volume profile is gonna want to watch, I think. So, okay, I am over. I gotta go. I will see you guys tomorrow. In the meantime, stay excellent, team.